Hello, everyone. Welcome back to the RationalInvestor.com's Daily Brief Recap. Dun dun dun. As you can see, I've absolutely blitzed out the screen here this morning. Let's just make sure YouTube is working. To the Rational. It is excellent. So I'll try and do this summary fairly quickly here for you. Lots of stuff, of course, to talk about. So first and foremost, let's talk currencies. Start off the bat. U.S. dollar index actually just, it's fluttering here. We might actually paint a nice weekly fractal. So probably want to keep a close eye on last week's lows, which was 98.20. You can see today's low is 98.21. Actually, I don't know if that's a day or not. Let's see. Daily. So there is that 21, and you can see the inside bar failure here. If we break through these lows, that confirms that weekly fractal, and down we go. What was really interesting, though, is when I was looking at this, I was trying to figure out, okay, so where is the money coming from? If it's not going into the U.S. dollar index, it must be going into something else. We'll talk a bit more about this in a moment, but things like risk-off assets like the Japanese yen, money ain't going there. This is an outright failure as far as I'm concerned, and if we think yen, we're probably now best to think things like, actually, I guess we could go all the way over there. AB equals CDs. So I'm actually thinking yen needs to come all the way back down. Oh, look at that juicy gap all the way down there to be filled in. So it ain't going into the yen, that's for sure. And I suppose, risk on, risk off, that kind of makes sense. If the US dollar index is topping out, technically that's a risk on bet. People that take their money out of T-bills, put it to work in growth assets, yada, yada, yada. So it does make sense to see the yen as sort of our ultimate proxy of sort of fear risk off is coming down here. So the money is not coming out of the US dollar and going into yen. All right, well, maybe it's going into the euro. Well, we look at it. You can definitely see the potential double bottom, and you can also see this fractal right here. So maybe, but what the heck? I mean, the euro is actually painting a red candle. It's down on the day, so it's not going into euros. Where the heck is the money going? And it turns out that, good old Goldman Sachs, I guess we got to give them some credit. I looked at my broader currency markets, and I don't see the money going in. I mean, it's interesting. Canadian dollar's catching a bit of a bid here. Russian ruble up a little bit, I guess, firmer oil markets. Australian dollar just still looks like poop. South African rand looks like poop. But now that the metals markets are looking heavy, these things, if anything, were an excellent sort of leading indicator here in this space that maybe cool your jets on metals enthusiasm. There is that Japanese yen structural failure. Moving averages are still bullish, though, so we'll see whether this actually drags the moving averages into bear territory. There's the euro we talked about just a moment ago, and lo and behold, Goldman Sachs' big call, the British pound. Money is pouring into the British pound. Go figure. So, on this bearish bot setup that we had, and this is pretty old. But you can see the head and shoulders failure, move stop to scratch, move stop to trailing, had counter trend rally, dips down, and then reversals. My hunch is on this bearish bot, you probably would have been best to hop off on a break above these levels. But I got to give credit to Goldman for calling. They said go and buy British pounds here. I thought this looked really dangerous, but turns out they were right. Way to go, Goldman Sachs. In the short term, maybe think of things like AB equals CDs. Where could we exhaust ourselves? And you can see we're getting awfully close to that exhaustion point up there. So we'll see how that goes. But I was just trying to figure out, first thing, especially for you guys, because I always like to report on the US dollar, where is the money actually going? Now, this weekly fractal hasn't confirmed yet. Like I said, the key low there, we're one tick above, but we're sort of flirting with breakdown. And if anything, When we look at risk on assets, the flirting with the breakdown of this weekly fractal here on the US dollar sort of corresponds with the fact that we're seeing, if we look at classic risk on assets, things like stocks, they're still working their way higher. Oil does have this little double bottom working, but it's kind of floundering right now. And good old Bitcoin just sort of going sideways here, testing its recent lows. But, and even you can see the bonds have moved lower. The gold has moved a bit lower since I last updated this, and the yen has moved a bit lower. So clearly it is a risk-on type of market state. So that should make sense that we actually, if this market is for real and stocks really want to blast to new highs, I don't know whether that's the case or not. I don't think so, but so what? That's just Brian's opinion. But, if risk on is really rocking it here, then it would make sense for the US dollar to fractal out here. So point I'm just trying to make here is US dollar index is at a very key pivot here. Let's keep a close eye on how she acts going forward. As we sort of talked about just there a moment ago, risk on assets are catching a bit of a bid, and crude oil here is trying to bottom. Stocks enjoying really nice rally. We had sort of talked about this recently. I was humming and hawing about whether to go and add another put to my portfolio. I've got 2 on right now. I'm just worried about this cheeky little gap right up here on the S&Ps. We are basically at reload zones. There's 78.6. There's that candle that I thought was probably where the institutions were defending their shorts. So you can see we dipped up into that level and we've gotten a little bit knocked back down. And what I just simply told through the daily brief is that if we can paint a nice little inside bar here tomorrow, then I'll go and buy another put. But for now, I'm just sort of treading water. This thing might just keep cranking higher here, and if that's the case, then obviously throwing more money at a trade that's underwater doesn't make sense. So give me a nice little sign of reversal, any kind of sign of top in here, and I can definitely consider adding those puts. The bond trade that we put on here recently, that risk off trade, you can see it's still just working away here nicely. And I really do like this trade from a TRI SOF perspective. My target is 130.40. I'm in no hurry to do anything here whatsoever. You can see the yen, it's broken to new lows. And if anything, poor old gold bugs. Man, I'd be really, really careful if I was a gold bug. Biggest gold stock around, Barrick, has now broken through that triangle that we tweeted out and stuff recently. So looking very, very dangerous here. The gold and silver stocks themselves actually have like what's called a descending wedge working here. So technically, believe it or not, this actually ultimately should resolve bullishly. So maybe the wedge has to come down, something like that. We start seeing signs of W's, and then you get your buy signal. My hunch is through this seasonally weak period, October, November, we've talked about this lots in the past, there's no reason to be a buyer of gold just yet. And with AB equals CDs, you can see all these gaps down below on this particular gold stock. I'm not in a big hurry to do anything here just yet. We did look at it through the daily brief, but I don't have time for it right here. But a lot of the junior gold names are actually working their way right back down to the bottom end of the range, and I'm watching them for signs of bottoms. But it's going to be a little while yet. So risk off is getting bitch slapped here. Risk on is trying to rally up against the top end of the range, maybe fill in the gaps up top. And really, I'm still thinking 30th October is when this cycle bottom should actually come in. We might actually even get like a nice little mini crash at the end of October to validate that cycle. So just keep that in mind as well. We did talk about things like, Jamie had mentioned this stock Weight Watchers. I had mentioned it yesterday. Did a little bit more analysis on it. And I don't know whether I'm really comfortable about shorting a name like this here, just because the profit potential isn't that big. And there's a lot of put open interest in this area. So what that tells me is And, kind of that thought maybe we get just a quick stock market dump into the end of October or something. But actually, I'm looking at a lot of stock market dumps if this sort of scenario happens, where actually this is going to be setting up a buying window. So I'm not really comfortable with the idea of shorting names like this, but dips down into reload zone, fill gaps, or against the original market structure, yada, yada, yada. That actually would be a buying window for me. But keep in mind, that's a good like $10, $15 lower, or like, 30, 40% lower in the stock price. So I am seeing a lot of that kind of action, and I like the idea of a nice big stock market into the end of the month to bring prices down into those buying windows, and buy when it snows, sell when it goes kind of conversation. All right, so just a quick update on some of the sectors and stocks I'm interested in. I'm super bullish on the shipping sector. I've got weekly charts here. Hopefully everybody can see these weekly W's trying to come in here. So I'm super jazzed about that. Just full disclosure, I have some of this GLBS. It's a free position because I sold half on a double previously. I went and picked up recently this SINO, and this is Kavarkinator's one of his ideas. Trade's working very nicely for me here. And then I also went and bought some of this NMCI, again, sort of W's. Good, solid story, and good proxy in the space. So just an FYI, this is what trades look like when they're just starting. And of course, when they pop, and that's when you usually see Brian banging out doubles, all that kind of stuff. Well, this is what the beginning of these trades sort of looks like. Same sort of theme. I thought today I'd mention a few pharma names that I've been buying recently. Absolutely love this CLDX. And actually, CLDX just put in a very rare occurrence in the market. You don't see this very often. But this is what's called an outside upside key reversal. So hopefully everybody sees W's, reload zone test, more W's, and this bar right here is a very, very bullish bar. Basically opened up below the three previous sessions and closed above, engulfing all of these bars. Very, very bullish. So I love the look of that little guy in here. Don't chase, do your own due diligence, not financial advice, just talking about what I'm doing with my money. You've heard it all before. Couple other names I've got on the books. Idera, love the look of this guy. And keep in mind, these stocks, like, look at this one. This one was $11. Here we are at $2 interested. This guy here, you can see the big old gap up at 6 and change. So hopefully you can understand why I'd be interested in a name like this. FYI, sold 3/4 of our long options positions on this at more than double our purchase price. So basically in a free position. And then this KPTI, another pharma name, beautiful weekly W's, sold half on doubles kind of ideas up top here. But lo and behold, look at what's coming in here, another W. So, pharma names, I'm feeling pretty good about these names in here. And this CLDX, I think, is just getting going. Obviously, you can hear all the blings. I'm probably running way over time today, but thought I'd just mention, we'll finish off. There's not a heck of a lot new to talk about in crypto land this morning. Interesting articles we were passing around in the Daily Brief about Tonvase making fun of Dr. Fake Satoshi and all that kind of talk. Does that really have any... I mean, it's fun, it's sentimental, it's all that kind of, fun talk about the market, but does it really have anything to do with price? Not really. If we're looking down at price in particular, I do like the fact that this double bottom has come in here. But the issue, of course, is there's the trendline support. And notice on our sort of fake out, breakout move yesterday, and, just like everything else, we don't want to chase. You want to throw on your reload zones. If you can buy W's, great, go for it. But this, I think, is a really good example where now we have AB equals CD harmonics that are actually aligning with tags of trend lines. And, we often talk on the site about wicks and tails like to be eaten, candle body lows as awesome trade location. So a nice little stab into this sort of 78-70 area wouldn't surprise me one bit. And on things like algos that we run on the site, we were getting Uber readings out of our algo indicators. They have fired signals. Not getting any algo Uber readings out of CME or OKCoin. And I kind of noticed OKCoin's disconnected a little bit here from the broader market, but it's just sort of broader commentary. What I would just be specifically sort of laser beam focused in on right now is, there is that double bottom I talked about. I suppose your trend line support would be something along there. So, there is, and I drew these bot levels off of this high range. A little bit different. I could have taken them off of these highs, probably give you a little bit different levels, but we'll work with this for now. And notice that the 25 level, the bot entry level set up off of this low, this low, this low, this low. And then you can see algo goes uber bear. It went uber bear here yesterday, so it actually had the permission to dump if it wanted to yesterday, but they just weren't ready. Algo's gone back to uber bear. We have broken through these lows, and so as a result, I think both algos are working here off 4 hours, and they're just going to simply sell this market structure, ride the uber signal, and just take a 2-to-1 off of that. And then also too, as I pointed out just a moment ago, that signal, I love when those signals fire off of bot levels as well. So I really do think that there's a pretty high chance that we have to dip into sort of this high 7,000 area, actually maybe even mid 7,000. Then if all hell breaks loose, keep in mind this is part of this massive channel, this original downtrend line, the midpoint of the channel. Notice that the midpoint of the channel lines up nicely with that bot objective, and that's down at 6,400 and change. Boo, hiss, hiss, boo. So anyway, long and short of it here, we do have new algo signals and bot setups firing, and they're looking for a stab down into sort of this mid 6,000 area. I think the only other thing I want to report on in this is we keep working away on our little day trader plan. It's a really simple one. What's the 4 hour doing? What's the daily doing? If they're in agreement, then hunt every single fractal setup. And, I want to bill myself as a demonstrator of best practices. What does it look like to actually vet out a trade setup? And, these are the kind of numbers that I absolutely love. In this particular case, yeah, we are paying a shitload of commission. But this is less than 1 month, right? We started the plan in September 21st. So we're not even a month in, and you've already got a 57% return on paying absolutely horrific commissions. So, as far as I'm concerned, nice 65% win rate, 49 winners. And I also talked about this in the Daily Brief. Interestingly enough, if you actually add the losers and the scratch trades together, you're almost booking almost equally amount of winning trades versus amount of scratch and losing trades. And yet, you're still very handsomely profitable. This is basically a professional trader's life. You're not always going to be right. In fact, in this case, we're almost 50% of the time we're getting stopped out at a loss or scratch. And yet, you can see the balance after 1 month is over 50% return on your money. That's not so bad for a professional day trader. So anyway, really great exercise, and went through demonstrating how you actually vet a trading setup in the Daily Brief today. So, okay, I think I've talked too much, but hope you got some good value out of all that. Have yourselves a great day. All the best, and bye for now.